A first-time buyer's guide to avoiding underinsurance. Buying your first home or making any major purchase can be one of the most exciting milestones in life. However, amid all the excitement, many first-time buyers overlook a critical necessity: insurance. More importantly, they fail to grasp the risks and implications of underinsurance. Without proper coverage, you might be left financially vulnerable if the unexpected occurs. But don't worry. This guide is here to help you avoid this common pitfall. Stick with us as we break things down into simple steps to secure the coverage you need, ensuring peace of mind as you start your new chapter. Let's begin by understanding the term underinsurance. Simply put, underinsurance happens when your insurance policy doesn't provide sufficient coverage to fully protect you in case of a loss. This means that if unexpected events like floods, fires, or theft occur, you may end up paying out of pocket to cover the costs your insurance policy doesn't. Why does underinsurance occur? For many first-time buyers, it's often unintentional. Most people either underestimate the value of their possessions, choose coverage that is too basic, or rely on outdated policy recommendations that don't reflect their unique needs. While it might seem like a quick way to save money up front, not having sufficient coverage can leave you vulnerable to substantial financial strain later on. Now that we know what underinsurance is, let's explore some common scenarios that can lead to it. The best way to avoid underinsurance is by understanding how it tends to happen in the first place. Here are some common scenarios. Undervaluing your personal possessions. Many first-time buyers don't take the time to calculate the full value of their belongings. From furniture and electronics to clothing and valuables, the total cost of replacing these items can be much higher than expected. Not accounting for rising construction costs. When insuring a property, it's easy to overlook how much it would cost to fully rebuild your home. Construction and labor costs fluctuate, and not accounting for these changes could leave you underinsured, especially if disaster strikes years after purchasing your policy. Choosing minimum coverage options. Insurance providers often recommend a default coverage amount that may not suit your specific needs. Selecting the cheapest or most basic option might seem like the logical choice at first, but it can leave significant gaps. Ignoring specific hazards. Depending on where you live, natural disasters like floods, hurricanes, or earthquakes might not be included in your standard policy. If your area is prone to these, neglecting add-ons for these risks could result in major out-of-pocket expenses. Now that you know the risks, let's move on to how you can determine the right coverage for your needs. The first step to ensuring adequate coverage is identifying what you actually need. Here's how to do it. One of the most effective ways to ensure you have the right coverage is by conducting a thorough home inventory. This simply means making a detailed list of all your belongings and their estimated costs. Include everything: furniture, appliances, electronics, clothing, and even smaller everyday items like kitchenware. You can use templates or home inventory tools to make this process easier. Be sure to document each item's condition and take photos or videos for evidence. This will not only help you estimate your insurance needs, but also make filing claims much simpler in the future. When evaluating your possessions, focus on their replacement cost rather than original purchase price. Replacement cost refers to how much it would take to buy the same item new at today's prices. This is important because inflation and market fluctuations may increase costs, particularly for electronics or specialty items. It's easy to overlook certain costs when buying insurance for the first time. For example, if you've made upgrades to your home or purchased high-value items like jewelry or collectibles, standard policies may not offer enough coverage. Be sure to include these in your calculations. Once you have a clear picture of your insurance needs, you'll be better prepared to select the right policy. When selecting an insurance policy, it's important to do your research and understand your options. Here's what to look out for. The first decision you'll need to make is between a replacement cost policy and an actual cash value, ACV policy. Replacement cost policy covers the cost of replacing an item with a new one of similar quality. Actual cash value policy covers the cost of the item minus depreciation, its current market value. While ACV policies are generally more affordable, replacement cost policies provide more extensive coverage and are often a better option for first-time buyers. Every policy comes with coverage limits, which is the maximum amount your insurer will pay in the event of a claim. Make sure the limit is sufficient to cover the value of your home and personal belongings entirely. If the default limit isn't enough, you can often increase it for a slightly higher premium. If you own high-value items like expensive electronics, art, or jewelry, consider purchasing add-ons or riders to extend your coverage. Additionally, pay close attention to natural disaster risks in your area. If your home is in a flood zone or earthquake-prone region, these add-ons might be essential. Many first-time buyers assume standard policies will cover everything, but exclusions may apply. For example, damage caused by certain types of events like mold or pests might not be covered. Carefully review your policy's exclusions to avoid surprises down the road. Buying the right policy is only part of the process. To stay fully protected, you'll need to review and update your coverage over time. Here are a few proactive steps to help. Insurance needs can change over time. For example, if you make significant renovations, purchase new valuables, or experience life changes like marriage, it's important to update your policy. Review your coverage at least once a year and make necessary adjustments. Navigating insurance policies can be confusing, especially for first-timers. Consider consulting with an independent insurance advisor who can recommend policies tailored to your unique needs. They can also help you identify gaps in your coverage. Not all insurance providers are created equal. Research the reputability and financial stability of your insurer before purchasing a policy. Look for customer reviews and independent ratings to get a sense of their reliability when processing claims. We mentioned this earlier, but it's worth repeating. Take the time to thoroughly read the fine print so you understand exactly what is and isn't covered under your policy. While having the right insurance policy is critical, there are steps you can take to lower your risk of loss altogether. Here are some ideas. Improve home safety features. Install smoke detectors, home security systems, and sturdy locks to minimize risks like fire or theft. Prepare for natural disasters. Consider improvements like flood-proofing, earthquake-resistant foundations, or hurricane shutters if relevant to your area. Bundle policies. Some insurance providers offer discounts for bundling different types of insurance, for example, home and auto. This can save you money while maximizing your protection. The good news: avoiding underinsurance is simple with the right approach. By understanding your needs, thoroughly evaluating your options, and maintaining active oversight of your coverage, you can rest assured that you're protecting your biggest investment. These steps might feel overwhelming at first, especially if you're navigating insurance for the first time. However, it's important to remember that you don't have to figure it out on your own. Rely on tools, resources, and professionals to help guide you through the process. To recap, underinsurance occurs when your coverage isn't enough to fully protect you in times of need. As a first-time buyer, you can avoid this by conducting a comprehensive inventory of your possessions, selecting a policy that suits your specific circumstances, and reviewing your coverage regularly. Taking these steps now will not only save you from unnecessary stress and financial burden, but also give you the confidence and peace of mind to focus on enjoying your new chapter of life. Your home or major purchase is a significant investment. Don't let underinsurance jeopardize it. Be proactive, stay informed, and secure the protection you deserve. If you found today's video helpful, please like, subscribe, and share it with someone who could benefit from these tips.